Well, U.S. stocks have kicked off the new month in negative territory, and the major averages moved even lower following the release of two manufacturing production data points. The S&P 500's Global Purchasing Managers Index remained in contraction in August, and the ISM's PMI reading came in lower than expected. So, of course, welcome to all of our viewers this morning. To all of our viewers from the U.S., Korea, and around the world, welcome to Global Money Talk by SamPro TV, live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and you are watching the inaugural broadcast of Global Money Talk. We're very excited to bring you the very first show this morning as we kick off our daily show. And we will begin the hour with our market briefing for live coverage of the U.S. markets. We will then bring you market insights for an in-depth conversation with market experts. Today for the Market Insight, we have Tai Wong, an independent proprietary trader, for an expert discussion on gold. So make sure to stay on for the entirety of the show. But first, for the market briefing, let's welcome JD Durkin, CBS contributor and host at Public.com. JD, good morning and welcome on to the show.
We say it's a great morning. This is awesome. What an exciting day to be here for the inaugural launch of the broadcast, and no one better I'd rather sit here with than you, Remy. Good to have you.
Yeah, absolutely, JD. So here we are. We're back from the holiday weekend. We are seeing markets in the red. So what do you make of what we're seeing in the equity averages today?
We can't forget this is historically the weakest performing month for equities as well as bonds, and that goes back well more than the last 10 years or so. Even though that we are coming into the month of September here on a 4-month win streak for the S&P 500. We are seeing a lot of pullback, a lot of profit taken on the table today, and that's true for the S&P 500, currently down about 1.4%. The tech-heavy NASDAQ, which of course trades at the market site here in New York City up in Times Square, down more than 2% to start the month of September on the shortened trading week rather. The Dow is down over 1% as well, and then you and I were talking, Remy, about the small caps and the Russell really taking the brunt of this selling today, down more than 2%. So really fascinating look, I think, to break down the sectors and get a sense on what is moving in positive direction. There aren't a lot of them. Healthcare up fractionally, consumer staples up fractionally at this hour. Similar story for utilities and real estate, some of those sectors that tend to lag behind the broader market. In positive territory barely, but for the most part, we're in kind of bearish territory, at least for right now.
And JD, you brought up an important point, because if we look back at the month of August, we saw a volatile start, especially on August 5th. But we have to keep in mind that the major stock averages ended with gains. And here we are, you mentioned the September effect, and we did get the release of some manufacturing production figures. And once we got the release of those figures, we saw the markets go even lower. But of course, this week, it's all about the labor market. So what do you expect to see as we head into this week? Lots of data points.
We got a lot of data points for sure. We got those manufacturing numbers, maybe a bit disappointing to the downside because we saw that acceleration of selling in futures contracts before the market actually opened. We've got ADP payroll figures out Thursday, but really the big one Friday morning, Bureau of Labor Statistics really giving us that top line figure. But we also had a bit of dose of reality as it pertains to the job market, Remy, just a few weeks ago. We can't forget, we get these numbers and they're really just kind of an initial estimate, right? Because then we kind of later tend to get downward revisions, which we just learned recently. It was about 800,000 fewer jobs across the U.S. economy over a 12-month period than we had previously believed. So I even say for Friday morning's number, even if it's a positive number, take it with a grain of salt. There may be revisions down the line here, but this certainly sets the stage to your point. We thought August was volatile. We saw the VIX spike during that August 5th sell-off. And then at one point, we had the S&P 500 was down over 7% for the month of August, certainly finishing through in a very strong way, crossing the finish line there late in the month. But we know historically September and October are very choppy, so I know more than a few investors, history does not repeat necessarily, but we like to take our cues from what happens in previous cycles. It's a lighter volume month of the year, so we could be in for a choppy few weeks, but we do have the Fed meeting after the jobs report as well.
And here in the U.S., we had the Labor Day holiday weekend, and because of that, some of the economic data releases are coming out on days that they traditionally are not released. But you mentioned VIX, and earlier in the month of August, we saw that VIX spike above 60, something that we haven't seen since the beginning of the pandemic. And here we are today, the VIX is at 18, so that gives you an indication of where volatility is right now. And I'm also glad you brought up those BLS figures, because that was a staggering figure. But of course, that could be revised as we head into next year as well. So I do want to take a look at what's happening across the markets. You covered the major equity averages. We mentioned what's happening in terms of volatility. And we talked about economic data that you're paying attention to this week. So tell us a little bit about what you're watching when it comes to fixed income as well as currencies today.
Yeah, of course. I mean, we're following overall the U.S. rates. What was fascinating to me between the 2- and 10-year yield spreads that we had on Thursday. Thursday, the big storyline. Wednesday, Thursday of last week, we were also closely focused, and understandably so, on Nvidia earnings.
Yeah.
But we actually had this, really interesting movement between the 2- and the 10-year yield. The 10-year was 2 basis points below the 2-year, so we started to have this inversion nearly back to normal. Really important on the bond side of things, but I would argue kind of got lost in the shuffles. We were all focused so heavily on earnings out of Nvidia. I think this is part where the traders are pricing in those interest rate cuts for September, so we'll continue to follow the kind of 2- and 10-year yield movements very closely in the relationship between the two. The dollar index was trading at about 101. It's well off of its highs that we saw trading earlier in the year in April and June when we saw that figure north of about 106. And for the oil, I think for the oil market specifically, for the most part, has been okay. Obviously, we have geopolitical concerns. We have political disputes in countries like Libya that is going to impact, I think, some of the output for some of those countries. But for the most part, I would argue, kind of stable overall in the global market. Of course, here at home, we follow WTI, that's the domestic benchmark, and then we follow Brent crude for the global benchmark on that commodity as well. So despite a lot of concern out there, for the most part, as of late, it seems like we've had a nice degree of stability. I know everyone wishes gas prices were as cheap as they were 4 or 5 years ago. We're quite a bit off of those levels, but for the most part, we've seen a nice stability.
And speaking of oil prices this morning, as you mentioned, WTI, that is lower by 4%. Brent crude futures are also weaker and in the red as well. And while we're taking a look at the commodity prices, we are seeing the major stock averages weaker in today's session. Right now, we'll do a quick check. The Dow Jones Industrial Average is down by over 400 points, while the S&P 500 is down 1%. And the Nasdaq Composite Index is lower by 2% as well. But you mentioned Nvidia, and that was such a key focus last week, and sky-high expectations were prominent last week. So one thing that I do want to mention to our viewers who are watching from around the world is that here in New York there was talks of Nvidia watch parties. Did you attend one, JD?
I did not, but I kind of had FOMO that I missed them because I saw them on social media afterwards, and I said I would love to be at a bar with other like-minded financial nerds like we are watching these numbers. But no, I was at home with the dog, watched them as they came across the wire. And it was a fascinating story, right? Because it was a beat.
JD.
It was a beat on top and bottom, just maybe not as strong a beat as we've been used to for a company that's more than 6% of the entire S&P 500. And we always watch those customers of Nvidia, which are Microsoft, which are Meta, which are Amazon, a few others. At what point do they increasingly build their own AI capabilities, and in doing so move away from their reliance on Nvidia? It doesn't seem like they're there quite yet, but that's a potential headwind for a stock that has arguably been the most important name in the S&P 500 over the last 18 months or so. So it was a fascinating, closely watched earnings report last week.
Yeah, well, JD, you weren't alone when it came to FOMO, because I was hearing about these watch parties for Nvidia, and I was thinking, wow, what a difference that a year makes, because Nvidia watch parties weren't happening last year. And if you look at some of the stories out there, you saw that all the screens in bars had Nvidia earnings, the conference call airing in the background. And usually when you go to a sports bar, you expect to hear what's going on in terms of the game. But as you mentioned, sky-high expectations. That's why we saw shares decline after they reported results, and even after the open, once the stock market opened in trading.
Yeah, listen, I mean, we all go to the bar to watch sports games. We go to watch the U.S. Open. Now we can go to watch our favorite earnings reports. Maybe next quarter. We'll
maybe then we can do some live coverage. And now that we've taken a look at the markets, let's move on to some top news stories that people here in the United States are focusing on this morning. So can you share some of the headlines with us, JD?
Yeah, well, we are 60 days and change away from a huge U.S. presidential election, I'm sure you've heard. And so really, I think the first story here at home I'm following are these dueling messages of economic populism from both campaigns. Of course, we're talking about Donald Trump on the one hand and Vice President Kamala Harris. The Harris campaign has as well as with President Biden holding a major Labor Day event yesterday, really looking, trying to, I think, further secure union support that has been foundational to Joe Biden's, not just presidency, but I would argue his entire political campaign, back to when he was elected to the Senate at only 29 years old, looking to kind of continue that momentum now for his heir apparent, Vice President Kamala Harris, alongside Minnesota Governor Tim Walz. And I think looking for those dueling messages on everything from the extension of the Trump tax cuts to what it means for infrastructure spending and how the two campaigns kind of position themselves. One of the big stories here at home, and a big news line specifically for the world of steel that came out of that event in Pennsylvania yesterday. Pennsylvania, arguably the most important state for both campaigns. 19 electoral votes up for grabs. A lot of prognosticators think whoever wins the Commonwealth of Pennsylvania probably wins the overall election. Harris yesterday saying U.S. Steel should stay American-owned. Of course, we had this nearly $15 billion deal announcement that said, there would be a proposed takeover of U.S. Steel by Nippon Steel in Japan, something both President Biden and Vice President Kamala Harris yesterday said. And I should say, to the roaring support of the crowd there in Pennsylvania, that should stay U.S. owned. We are seeing a lot of downward action on that stock today. We've been tracking it. U.S. Steel shares down more than 3% so far to kick off the month of September. We'll closely watch it, I think, over the next few weeks. It's going to be a long, drawn-out story, but it is worth noting what the Harris campaign says, and I'll be closely following for the days ahead for how former President Trump responds as well.
And JD, you have experience covering politics. I'm sure that you're keeping an eye on what unfolds on a day-to-day basis, but as you mentioned, we are seeing shares of U.S. Steel down by about 3.5% in New York morning trade. So what else are you focused on, JD, this morning?
Another issue, and I think this kind of gets into politics here at home, but also items around the world, is the real proliferation of artificial intelligence images, specifically on social media. Remy, I know you and I both spend a lot of time on platforms like Instagram, platforms like X. I have been stunned because I was a politics reporter for years, but we're really seeing AI-generated images and videos sort of go after and in many cases intentionally impersonate some of our world's most influential figures, and that includes Trump, Harris, Biden, Obama, Elon Musk himself. And I think while it's still being done very much in a kind of joking type of way, I think this does open up the door to the threat of what AI-generated misinformation means, not just for the election here at home, elections that are happening in democracies all around the world. And then what does this mean for markets? What happens if and when, God forbid, we get to an era where AI is being used to, coincide with earnings reports? Like we said, what if everyone's at the bar for Nvidia earnings, but it's an AI-generated info that starts to move the market one way or another? So it's a danger I've noticed really in the last few weeks that's definitely worth keeping an eye on as we move forward. That's another big story for sure.
And JD, you bring up an important point because it's been a big year for global elections. Over 50 nations holding elections this year. And it was really interesting you bring up AI. So in India, the government actually experimented with AI and even had AI news anchors. So if you think about what that means, right, for us, for people who are on air and experimenting with on-air journalists, what do you think of that?
Well, first of all, to clarify, Remy and I are actual human beings. We are sitting here. Our producers are all real. This is not an AI-generated show. I understand it. I think it is the most exciting technology to come around. I think from time to time we have these shiny things in the markets, right? It's this thing or it's that thing, but this really seems like this has the staying power, promises to transform entire industries, but there is a bit of a double-edged sword. I think it's kind of contingent on all of us as news consumers, as smart investors, to do our due diligence, try and best separate what is actual and what is simply being generated by artificial intelligence, and making sure those lines aren't blurred wherever possible is really important.
Absolutely. And in this election year, we'll have to keep an eye on those deep fakes, as you mentioned, JD.
Yeah. Exactly.
So as we move on, what else are you watching today?
Yeah, a really interesting story. If we think back to that August 5th sell-off, had to deal with the Japanese yen, the carry trade. The head of fixed income at T. Rowe Price is now looking at the fact that the Bank of Japan is in a fundamentally different situation than our central bank is here at home. So the BOJ, of course, is one of those rare central banks that's still in a interest rate increase cycle. Calling it, the head of T. Rowe Price there, it's the San Andreas fault of finance, now warning as recently as this morning that he's just seen the first shift in that fault and that there is more in terms of expected market volatility. We are seeing the yen rise this morning in relation to the US dollar by more than 1%. So for all of these concerns that we had talked about a month ago, when we saw the VIX spike, when we saw this, this massive one-day selling in U.S. equities, any of those underlying concerns with regards to the Bank of Japan may not be entirely off the table. A really important story, I think, to keep in mind this morning, and as we move forward in the month of September as well.
And you brought up a very important point there, because when the sell-off was happening on August 5th, it was the unwinding of those key trades, and we're keeping an eye on comments coming out from the Bank of Japan. But for the time being, it does look like the Bank of Japan will not be moving anytime soon. We'll see how that affects the yen currency, and of course, whether this carry trade will continue. But what else are you watching, JD?
Yeah, and another big one in terms of global politics. Of course, hundreds of thousands of Israeli citizens taking to the street to protest the government of Benjamin Netanyahu. This was tragically after 6 hostages were found dead in Gaza. Even President Biden, a bit of a rare rebuke against the Israeli leader, kind of indicating that Netanyahu is not doing enough to reach a ceasefire deal, and a very rare apology from Netanyahu, apologizing to those families as well. Those were really stirring images the last 48 hours. Really an important story in terms of geopolitics to keep an eye on, and something that will probably be talked about a lot more in our U.S. election from now to November as well.
Yeah, and I'm sure we're going to be hearing from both candidates when it comes to geopolitics. So you and I, we spend a lot of time here on Wall Street, and of course we pay attention to what happens in terms of economic data, but in terms of how geopolitics affects the markets, it really depends, doesn't it? So based on your experience, how do you pay attention to what's happening in geopolitics and really discern what affects the markets?
I think oil markets tend to be where I focus, because we have these clear benchmarks, and lucky for us as reporters on the floor of the New York Stock Exchange in real time, Remy and I can look up at the big board, see where WTI is trading, see where Brent crude is trading, and then I also, because I covered politics, I look at the output from the OPEC plus countries, and then what are the efforts from other non-OPEC countries to try and rival those output challenges in order to kind of suppress the costs of fuel, right? I mean, arguably, I think we saw the Biden presidency forced to do things in terms of oil and global commodities they probably wouldn't have wanted to do otherwise, but when faced with those inflationary pressures, say, hey, we can, on the one hand, try and pass pro-climate legislation, but on the other hand, we can continue to drill if there is a drill baby drill president. Ironically, it probably is Joe Biden, because we are looking at record high outputs. So I think in terms of geopolitics, we do have those at-home measures, and I think really oil is arguably the most important one to look at in terms of our impact, because we're all using fuel every day. We're all impacted.
Indeed. I do want to take a quick look at the markets right now, and we are seeing the major equity averages still in negative territory. The Dow Jones Industrial Average and S&P 500 are off by over 1%, and the Nasdaq Composite Index is down by 2%. And of course, when it comes to crude oil futures, we are seeing weakness continue, with the front month contract for WTI off by a little under 4% on the session.
Can I hit on just a couple of the stocks I think are noteworthy? Obviously, when we talk about the Dow, as we certainly know, is 30 components. The vast majority of Dow companies are starting September down into the red. The most weighted name in the Dow, the most important name, ironically, is UNH. That's United Healthcare. It's actually having a very strong day, up 1.3%. But Goldman Sachs, very heavily weighted name in the Dow, is getting hammered, down more than 4%. Comparable story for Caterpillar, the 5th most weighted name in the Dow. If you look at these tech consolidated names that tend to drive the Nasdaq or the S&P 500, Apple's down more than 2%, Microsoft down 0.8, Nvidia down more than 7%, obviously a very choppy, volatile stock. So a lot of those big tech names, if they're going to be in the red, pretty safe assumption the broader market will be in the red as well.
Well, I think it's always healthy to take a look at the breakdown when it comes to the names that are in the Dow Industrials. And I'm glad that you brought up Nvidia, because it just shows how much we are down right now in today's trading session. So as we head into the rest of this holiday shortened week, JD, of course, we're paying attention to economic data releases and, of course, what the implications are for that key Fed Reserve meeting in mid-September. So we heard from Jay Powell out in Jackson Hole, Wyoming. It must have been very nice that time of year, right?
It looks so nice out there.
Yeah, indeed. Hopefully one day we'll be able to attend one of those Jackson Hole symposiums where Jay Powell speaks. But in terms of what you're paying attention to, not just today, but as we head into this month, what are those key data points as well as events that you're watching, JD?
Well, obviously, I think, payrolls we talked about this week is going to be crucial. We'll get the Fed Beige Book information later on this week. Durable goods for the month of July actually comes out later on this week as well. So some of those data points where we could watch specific secular sectors more closely than others will be really important. But then I think in terms of September, we watch overall for volume. We'd want to get a sense, are we still kind of at the very end of these dog days of summers where volume tends to be pretty low? People are trying to stretch that, kind of last few days of summer vacation. But now as it's back to school, now as more families are back to their rhythms, I'll be looking for that uptick in volume. Try and get a sense on what is the market reaction. We're all sitting here basically assuming that September 18th will bring that first big rate cut here in the United States. I think popular thinking has been that might be a bit of rocket fuel on U.S. equities, but if there are kind of other presumed fissures, we may not really have that reaction the 18th, 19th, 20th that we're really expecting here. And then, of course, that's the last Fed meeting until the election. So we're kind of on this collision course of all these different stories in monetary policy and fiscal policy, electoral politics, geopolitics, all colliding at once. So these are the sorts of months where people like Remy and I are very thankful for coffee and lots of caffeine because we probably won't be sleeping a whole lot in the next few weeks, trying to do our best to keep our finger on the pulse of all these stories.
Yeah, and JD, if you think back to this summer, right, from politics, geopolitics to market volatility, we got all of those things, and traditionally August tends to be a pretty quiet month in terms of volume and event risk, but we had so many things happen in terms of politics and, of course, market volatility. What did you make of some of the political events that really moved the markets this summer?
I think in terms of, it's tough to even remember but I think July 21st was the day that President Biden said he would not run, and so basically we've been in this 40-day shortened sprint of an election. Usually presidential cycles go on for more than a year. Unfortunately, here in the U.S., we're really dealing with what's basically a U.S. snap 100-day election for the first time, and I think everyone's just trying to figure out exactly what that means. I would like to hear more from both campaigns about sound economic policy. We always say you campaign in poetry, you govern in prose. Part of the challenge for both Donald Trump and Kamala Harris is that if you become president, a lot of the big things you want to get done, you need 60 votes in the U.S. Senate. Neither of these candidates, spoiler alert, is probably going to have 60 votes. So you have to really compromise. You're going to have to try and sell a degree of economic packages to your voters that might not actually be realistic if you've got a razor-thin margin. You got to start to compromise, get some of what you want done on the economy, and also kind of give some points to the other side if you're actually going to get these bills onto the president's desk, whoever that president is. Just important to notice as you hear the campaign, you hear a lot of big promises, but when it comes time to governing, the challenges are a lot more difficult.
And as we head closer to that November date, the U.S. presidential election, I'm sure both of us will keep our eyes and ears open for more clarity when it comes to economic policy. But I do want to ask you, when it comes to presidential election year, what do you typically see when it comes to U.S. stock market reactions? Yeah,
markets actually tend to do pretty well during presidential election years, even if it's a big wait and see. I mean, in my estimation, I think investors have really short memories. They are really good at finding the silver lining. My take throughout this year has been no matter who wins, pending some unforeseen economic calamity we're not thinking of just yet, the market will probably find a way to be resilient and go up anyway. And I argue that because if Vice President Harris and the Democrats have a clean sweep, investors will think, great, that's more on manufacturing spend, that's more infrastructure spending, and we love that. If Donald Trump and the Republicans win, that could mean more tax cuts to the forefront, which investors really like. And then, of course, if there's kind of a split result, one party controls this, the other party controls that, that means less of a path forward on regulation against some of these big tech companies that have driven the market to new highs. So that's the long way of saying no matter what happens, I think investors will find that silver lining. And ultimately, these are financial instruments that are designed to go up. Maybe not in the short term, but I expect some market optimism regardless of what happens in November.
Well, we'll keep an eye on what happens here on Wall Street, and we'll do a quick market check as we quickly approach the 11:30 hour. So right now we are seeing the Dow Jones Industrial Average lower by over 1% or 460 points. The S&P 500 is extending losses as well, down by 1.4%, and the Nasdaq is also down right now by over 2.2% or nearly 400 points. Very quickly, taking a look at crude oil prices, they are down about 3.5%, and then gold futures are nearly flat on the session as well. So JD, we are seeing red across the board as we kick off a new trading week as well as new trading month. And we'll continue to keep an eye on what happens. But as we head into the rest of this week, what are some key things that you'll be paying attention to in addition to all the economic data?
Well, I'll start with the anomaly in the sectors of the S&P 500 today, because Remy, as you know, it's not often where we say, wow, technology stocks are getting absolutely hammered, but real estate and utilities are doing pretty well. But that's the kind of upside down world the market brings you sometimes. Today, technology is the biggest laggard in the S&P 500, down more than 3%. Energy stocks also getting hit really hard. So I'll look to see if that continues as this first trading week of September moves forward. And then, of course, it's all about that jobs data. What do we learn Thursday through ADP? Friday from the Bureau of Labor Statistics to reinforce the soft landing narrative. It's all about a narrative. It's a sentiment. It's a vibe as we get closer to the central bank. I'm so excited that they're actually going to cut interest rates. We've been talking about this for years.
My gosh, I know, right?
Finally, this might actually happen here. And so what do we get Friday? I don't think one way or another it'll kind of influence the Fed too far away from what they already think they're going to be doing, but we want to have that soft landing narrative reinforced a bit more to say, was the Fed actually successful at bringing down inflation, cooling those inflationary pressures without driving the United States into a recession? That's the sweet spot. Much easier said than done. Friday morning is, I think, the most important piece of information we'll get for the next few days towards that end.
Yeah, and as you mentioned, Friday morning, 8:30 a.m., we will get the non-farm payrolls numbers as well as all the details from the August jobs report. And you're right, if you take a step back and think about where we were December 2023 heading into this year, markets hitting new highs, and we were thinking we're going to get rate cuts as we headed into 2024. But here we are, September 2024, we have yet to see a single rate cut, but expectations do remain high, JD.
I thought the Hawks were very loud on this. They said, oh, we're in for 3 to 6 rate cuts. I think that's kind of unrealistic given where core PCE, that really important inflation gauge, ultimately was for the Fed. Still more progress to be done, but any interest rate cuts for investors, even if they're later than expected, I'm sure will very much be welcomed news by all investors. Start to bring down those borrowing costs in the economy in a very cautious way. You don't want to go too fast, but we'll get a lot more information on that in the next few days.
Well, JD, I look forward to having you back on bright and early tomorrow morning. So thank you so much for joining me.
Can't wait. Thank you, Remy.